Good morning, everybody. Happy Monday. Well, we're starting off a little slow here. It's normal after Friday's big turnaround day. Wild market, and everybody knows the big gap down that occurred Friday, and buy the dipper stepped up right in that support area that we had marked off. After some jiggles on Thursday, recovery, back up and away to new all-time highs. So now we've got a wide range bar. And we talk about wide range bars igniting and wide range bar ending. So wide range bars igniting happen after a breakout of a base or a turnaround like this. They're power bars. And in past reviews, we talked about power bars are the weakest link. And reason being is that they create price voids below. And what they're supposed to do is create support. And so here you can see this wide range bar in the 15-minute, and it created support. It kept going up. So over here, while we're not looking at the intraday, you can see it must have created support and had bullish price action at resistance, and it just kept going. Now, this wide range bar, it's different in that it's not after a multiple down correction. It's really not after multiple bars moving up. Well, this had multiple bars moving up, and this started to get the look of a wide range bar. I think my comment at that time was sometimes wide range bars don't look so wide when you see the next one. It was to mean if the next one was continued and pushed up and was even bigger. Well, that didn't happen. It stalled, and then dip. And then we had the big dip on Thursday, which looked like if it could close weak would be the beginning of a corrective process, especially after this type of a run. Well, we all know that didn't happen. So what the hell is this? Well, it's not the ideal type of a continuation pattern, correction bar pattern that had this type of a run. Nonetheless, they do come in different variations and things are not always the same, but this stall here, the nasty gap down that took out these lows and reversals, it's really not an igniting bar because it wasn't just after this corrective process. It wasn't that long of a base. So it's like a minor pullback corrective day or so and a reversal. So it's a continuation pattern. Now what? Well, now it needs to continue. And so far today, starting out slow as it is, well, back to the factory work. We want to see prices stay in the upper half of this green bar. And of course, it can dip below, but it's got to close above there. Excuse me. And now, from a broader perspective on the week, prices have to stay above last week's low, which is Thursday's bottoming tail bar. So what happened last week, pretty much everywhere, was that while Friday was a big event day, right, that rally, from a longer term perspective, it was a slowing momentum week. How do we determine that? Right? MTS has definitions for everything, because if you can't define it, how the hell do you teach it? How do people take it and make it their own? And so we've got small candle bodies on the weekly charts, the difference between the open and close. So the momentum stalled. Now, it's not the same. Well, here you can see it was up multiple weeks in a row and the momentum stalled. And we had a corrective process that lasted a couple of months rather than one through time versus one that pulled back in price. So now this is only up 1 week out of the consolidation and the momentum slowed. Really not a big deal, but ideally, we do not want to see it close below last week's low. That would be short-term bearish. And going further out, which is no thing to even suggest that possibility, but we all have lines in the sand that a break below this red bar would be breaking below that base would be intermediate term bearish. So right now, the bias is this is going to continue to go up. Now, SPX today, there's premium down here below this bar's low. I'm not too comfortable with that myself. I don't know what today is going to bring us, but it is a wider range bar. So that is a plus for getting away from what I call the danger. But there is premium at 43.25 and a little at 43.20 if you're so inclined. On the upside, there's nothing up there. So all you need to do is see if you're comfortable with the premium, the smallest amount, which typically what I'm looking at is like, the bid-ask spread will be like 40 cents to 50 cents. And then you just pick some other strike that's far enough away to make what you'll receive worthwhile. And let me just look up above. You got to go to like 43.95 by what's posted there now. And 4,400's of, big whole number, but it's not that far away. So I don't think I'm willing to bet that this won't go up there, especially after Thursday's reversal. All right. Okay, futures. And you can see just trading at the top of the range. There was a little dip. Buyer stepped up again. There was a W type of bottom, and it's right back up to the highs there. So still bullish price action that's going on. Let's look at the Qs. 43.95. 43.90. Well, you see the premiums there, McGraw. It's really a personal, are you willing to bet that it won't go up there today? So being relatively close, I'm not willing to make that bet, but I'm not McGraw. These things can get scary when, so I like multiple lines of defense to get in the way, and there's nothing to stop it from going up there. Now we could look at big open interest, and so I mean, if it was big open interest, which it's larger at 4,400, and there was premium above 4,400, that would be something more that I would be willing to look at, because the big open interest, a big whole number, the fact that intraday it ran up like that. So we've got, kind of an end of day run. So the likelihood of it continuing a run first thing this morning anyway is less likely. So we put all these things together, as to like, hey, what's my common sense strategy here? And then what is my risk tolerance? So, that's pretty close. It's kind of close. It is close when you're seeing the way things move here. And this market is a little crazy, to say the least. All right. So Qs, they've been running for a while and the momentum slowed. Much more important for this. Well, they're all important not to break from different indices as we look at them. But this one has had quite a run. And so a break below last week's low, right? So far it's just slowing momentum, but a break and close below last week's low after multiple bars running up would be more bearish. Right? There's more common sense, analysis here. So we'll see. Slowing momentum can result in sideways price action where it's just choppy. So that may be the case. And, going through many of the underperforming sectors, which have been trying to bottom, one of the mentions in the weekend letter was possibly a shift from growth to value coming, which would help, keep this market elevated. Common sense says that things don't go straight up. Now, sometimes they go vertical after moves like this, and that historically ends that move. But this could chop around and pull back. The prior pivot low. Well, this will this will become a new pivot low and major support if this makes a new high and 2 more bars to the right. This will then become major support, and a break below that will break the uptrend in the weekly time frame. So for now, we don't have a pivot, but that's an important line in the sand because that's last week's low. Qs are actually up and have continued to push up. They look like they're at a peekaboo new high here. Same story, of course, weekly chart. Russell held the pivot low, reversal back up, possibly a higher trading range here, meaning a trading range. Here's the weekly chart in the bottom here, a trading range within the trading range. So this is the current contract, and this continuous contract is messed up, but drag this down. What am I talking about here? Maybe this low would be the new trading range, upward trading range, and way down here would be, here's the big trading range, and here could possibly be the new upper trading range within the bigger trading range. A break below here obviously suggests it's going to go back down to the bottom of the bigger trading range. 2,200 potential put spread. I wouldn't, not for me, because, well, I should correct that. If that was expiring today, yes. If it's expiring Friday, no. This is a nice bar, but it's within an overall sideways range, and it's coming up into resistance. So credit spreads are all about how long. I don't think so for Friday. It's too early to tell, as to whether this might hold or not. This is, the markets are bullish. 2,100. Yes. Matter of fact, I mean, as far as IWM goes, maybe not the futures, but IWM, if there was premium there, and I highly kind of doubt it, but could look, I don't see any problem with selling and make it put down at the bottom of the trading range, especially for Friday, because I don't think that's going to break. And if it, yeah, of course, there's no juice down there. I figured there wouldn't be, Dan, but that would be the strategy with a naked put. Do you mind owning it? I wouldn't mind owning it down there. So, all right, what are bonds doing? I'm going to look at yields going down, obviously in a downtrend. This held above the 200. And this is, the 10 years, which typically talked about on CNBC. They always talk about the 10-year. They don't talk much about the 30-year, which broke down through the 200. Bounced back up, and you can see the downtrend. And this is going down. And then we've talked about the 5-year, which also came down, which kind of neutralized the bearishness of those longer yields, dated yields coming down. Now, if this starts to pop back up and the longer dated ones don't or go down, that is going to be something that, just based on how the markets have been reacting to these interest rates lately and the yield curve tightening up, that it won't be a positive. And remember, we got lots of financials that are going to be reporting this week. I think this is a big week for banks and earnings reports. And, a tightening yield curve could be a fly in the ointment to positive earnings that could otherwise move those stocks up. So something to keep an eye on. And of course, we'll all be watching to see the reactions to earnings, regardless of what's happening with the yield curve. Crude oil, just consolidating, breakout, little breakout failure, break below this major support. The next pivot low is right here. And this is a better example of a trend. Here it accelerated a bit and it pivoted. So the distance between pivots is relatively close. And when that's the case, you have more lines in the sand to support pullbacks. The other takeaway from that is, while that is certainly the case, if for some reason there's some event that prices were to slice through both of those pivots at one time, that would be extremely bearish. Now, in this rather schizophrenic type of market, looking at the Dow, as this came down after failing at the highs, it sliced through all of these pivots. Now, it's a greater than 100% retracement, but historically, this type of a break results in a lower high and then maybe a retest pattern that goes up, or lower lows, of course. It rarely turns on the dime and goes all the way back up. And this is a new closing high, not an intraday high, but it's a new closing all-time high. So institutions trade nervously. They trade like day traders looking at a level 2 screen. It's a bit of an exaggeration, but you can see how quickly they sell and how quickly they step back into the market. So it's a nervous market. It's like, I'm so damn bullish, I can't wait to get in. But if somebody sneezes, I got to hit the bid hard. It's crazy. Gold down a little bit here. It had a nice move off of that breakdown bar failure. Still got a lot of work to do below the 50 and the 200. And yeah, obviously broken through pivots. That's bearish and more of the type of price action that occurs after a nasty break like what occurred. Silver, right? Weaker to gold, but again, a nasty break and trying to bottom out there. Bitcoin, kind of just like dead, from the daily chart perspective and weekly. You got this breakdown, the bottoming tail bar. It couldn't get back up into the void. So, a little breakout failure. It's kind of short-term bearish and intermediate term bearish, but it ain't going down. So we'll wait. And as I mentioned last week, can it form a wide range bar up, big green one, or big red one down? So I see it as a stay away. And bringing up the rear, different variations of this chart that broke down and retraced back up. Things like materials, which broke down and took out the high. So there are different sectors that have been weak that we'll keep an eye on this week that just might bring up the rear a bit. So we'll see. Notice the bottoming tail bar over here. So clearing these highs, we might see a lot of beaten down things start to play catch up. All yours, Dan.
All right, good morning. And with the NASDAQ stronger here, a number of our trade ideas in the weekend letter are gapping over the entry. So I'll be concentrating on looking at those at the open. But we don't have that much inventory. So we had no problems of our opens. Let's go right to some gappers. Stephen Spunk. No, it's not a bullish pattern, right? It's kind of a little bit of an M top, a little bit of a breakout failure, a little bit of a bear 1, 2, 3 gap breakdown. Yeah, that's just not a good pattern for me for directional. UPST gap in 123.70, mark it off. It's gapping right to a wall, a brick wall. Now I like the 1, 2, 3 gap reversal, but the problem is you got no price void. So if this same 2 bars were over here to the left, then there's my price void. Then it would be a no-brainer. I mean, Nikola has a much better price void. And I see it, if it can get over Friday's high. So yeah, that one's worth watching. It broke down, of course, on the daily and weekly with a breakout failure, but even if it goes up, retraces 40% of that, or maybe up to the 20, that would be worth a trade. We aren't marrying the thing. Oliver's asking about Tesla bearish. No, Tesla, this is actually the 123 that I just mentioned in that other chart. That I have a gap reversal on support in the 200, and I got a price void. So I actually like Tesla for a put spread, and this is one that's gapping over our entry. Let's see, McGraw, you asking me about Marvel, HSBC. Marvel, I don't, you got all those overlapping bars right there. So that's a good example of it not being a retracement from a V top. So no, I'm not crazy about that one. HSBC, that's in a downtrend. I mean, it's bearish, daily, weekly, monthly, and gapping down pre-market and earnings this week in bank stocks. So no, I don't like either one of those. All right, some gappers here. SPI. Let's see, this one's gapping over this wall of resistance, but the gap's too big for me now. But it would be worth watching this one on a pullback. You can get a pullback to, low sevens, then that would be nice. So I'm going to put SPI over here. PKS. It's if there's no price for it, folks. It did have a nice reversal Thursday, and it's deep into resistance, but you still got a wall of resistance right there. Okta put spread, yeah, without a doubt. Yeah, that one's much better. If it can take out last week's high, and then you put spread under last week's low. So yeah, that one's much better. Hey George, you're dropped in. Jose, TME, SWBI, SWBI. That would be okay for bounce. It's a buy setup, but it's a deep retracement, but it's reversing here on the 20 with a price void and gapping up. So that one's worth watching. Oh, that's Swabi. That's the gun that got climactic. Hey, Craig, remember this tail? We were going to short a call spread on that. That was we nailed the day. TME short. Jose, no, my friend. That's down 10 bars, far from the 20. It's not a high probably, we don't short things like that unless you're just day trading. And so it is gapping down. It's just, it's bearish, but it's too extended for me. JR, Chewy. Yeah, Chewy could be a put spread under Friday's low. BRS, gap in the 19 bucks, so it is a big gap breakout. Look at my bigger, wow, look, that was a beautiful bottom right there. When we're in the green room and, I give them little quizzes, I'm like, where is the no-brainer entry for this as a core long? And I would say right here. You had a small breakdown failure, and then you had red bar ignored with a price void. So And then, you go back to your daily and weekly charts to find your entries. Overstock still good. Overstock. Yeah, for put spread. Put spread Friday's low. I'm getting more alarms going off here. MyGen. MyGen looks great, all time frames. STX I have as a put spread. That's gapping up, so that looks good. And Zoom. Yeah, Tesla's fine if you can get filled. Zoom has to be under last week's low. PayPal, if you get filled, it's fine. You know what, Austin? The reason why is because, yeah, it's actually a directional in the advisory letter, not a put spread. Carve, this was one of the Reddit boy toys. Barron's had the cover article this weekend on these meme stocks. Disney had this breakdown failure. I was looking at Disney for a put spread, and it had what's that new movie, Johansson-Berg? They made 80 million bucks. Oh, when I first looked at it this morning, it was actually down a few pennies or flat. I was kind of surprised with making 80 million, unless they thought they were going to make more. Black Widow, yeah. All right, IMAX is a movie theater. There's no pattern. Although 30-minute high could be a day trade. AMC, obviously movie theater, and also a meme stock, gapping down. Malibu Boats got a positive article in Barron's, but no great pattern. MTSL, gap's too big. Look at the volume. Big old bar on Friday, but wow. Wonder if that's a Reddit boy toy. Oh yeah, somebody's asking Space and Aster. You know what I was thinking when I was watching this guy go to space? Oh, this thing was up $4 and change earlier today. I acted so now it would have been a losing trade. But when I was thinking, when I was watching the spaceman on Sunday, I was thinking to myself, we should have bought, or at least gone through our checklist to maybe do a long straddle or strangle under the belief that this thing's going to gap up or down based on how successful the flight was. And it was up, like I said, $4 and change. Now it's only up $1.40. They are Sumo, up alarm. Sumo, we've been long for a while. We had to sit through some pain in Thursday's gap down, but a beautiful recovery. Now it's breaking out. Look, we're in this as a core. See, price void. Remember like that other chart I showed you on the monthly? I said, look, this would have been a beautiful entry. Well, that's what we have right here in Sumo. So we're nailing the entry on this thing. So you can even add Sumo. It looks great. All right, Q strong. The other horsemen are weak. And that was like the story. I feel like Groundhog Day. I think I was saying that for 3 days in a row. But yeah, Sumo looks great. Well, detective, it's not a big gap up. I mean, both, you can calculate how many pennies, but secondly, a big gap up is a visual. There's no big, it's a gap, yeah, but it ain't a big one. Here, I'll show you a big one. There. Look, there's a big one. All right, so yeah, I want to coin. Our coin, we have two trades. We have a covered call and also put spreads are doing well. Wow, what's in the Tesla today? This thing's ripping. Um, probably Austin. You know, we're just chart readers, you know, so I would make all my decisions on the charts as always. AMC is weak. I think AMC and GME are gonna, you know, come back to earth based on fundamentals. Oh, XLB, that's not a good start. Remember last week, wow, well, we were watching these, I said, just glancing at my 15-minute sectors and hack there. Looks like it's at all-time highs or close to it. It looked good. Means it's hold. That's a very strong trend on the daily. So yeah, it looks good. I'm just a little more cautious on Mondays, but it looks fantastic. Diamonds, so inside bar right now, spiders, but you know there's still a lot of air underneath here. IWM weakening, so I don't know. Our Sui is doing well from last week. Look at old Sui. We nailed this on the afternoon breakout on Friday. Looks great. This is in the real estate sector, XLRE. O is valid if it takes out Friday's high. CVA still in a trading range. Coma, Ether here now. The Bitcoin down 1,000 points here. Zoom has to go under last week's low, overstock. Yeah, definitely. Yeah, absolutely. Sebastian's holding great. Are you getting the credit? Um, Overstock and PayPal, spot, spot. So, oh yeah, all of them. Tesla, we're not going to get filled, so we have to cancel that. But yeah, all the other ones in the weekly are good to go if you get filled. Yeah, I had Tesla here.